Jyotivardhan Jaipuria is now joining us this morning. Good morning, Jyoti. Thank you so much for taking out time for us. Your outlook for 2016, you think expectations are now realistic and probably India Inc. and the government would be able to deliver what markets are expecting?
So, if we go back into 2015, people had very high expectations and most of it didn't materialize. So, people are starting again 2016 on a more positive note, hoping things start to change. My view is that 2016 actually we may see the economic recovery finally come in. So, just like wolf is coming, I think the recovery will finally happen in 2016. It is going to be back-ended, however. So, it's not like we're going to see recovery happening early part of 2016. So, I think we'll have a back-ended recovery. We'll actually have earnings which probably don't get downgraded in the third and the fourth quarter of the calendar year. And interest rate cuts, pay commission, all that helps build the recovery. So I think we'll have a good market, but it won't be like a smooth run. It's going to be probably a more back-ended market.
Right. What do you think, now would be the trigger for 2016? Earlier, at the start of 2014, you would have said that US hiking rates, whether ECB would continue with their, easing, whether China would slow down much more than what it had already done in 2014. All those were concerns. But now, do you think these things are factored in as Fed rate hike is behind, ECB has told what they are going to do for next 12, 18 months, and China's slowdown is probably every investor is living with?
So, I think like the global is still going to be negative for the markets. So, it's going to be basically positive India story and with a negative global backdrop. If we think of the globe, the one thing which worries me the most and which, could be like a big dampener on markets is still China, but probably not as much the economy because now everybody's, the consensus is that they're growing much slower than what the official figures are. So, that is built in. I think it is what they do to get over this slowdown, and my worry stems from the fact that I don't know if they go in for a currency devaluation, because if they do that, we'll have a globally competitive currency devaluation. Every country starting to devalue their currency, and that I think is the big risk factor for 2016 globally.
Right, but if they do that, do you think it will be taken in as a big negative for India as well?
See, it will be a big negative because once you start this, you don't know what happens. So if you go back to 2015 also, probably the time where the Indian markets got scared the most and where like mid caps really came off was when China devalued their currency. And the reason is that once they start doing it, you don't know what happens after that. You start a domino effect, which then nobody can control, because in the end China didn't benefit from their currency devaluation because everybody depreciated the currency much more than China. But they did that, and probably that is something which is a risk for next year.
Right. How big a risk would be the crude prices, which have fallen to $35, $36? The flows coming in from Middle East or the liquidity lost because of that particular call going wrong globally. Is that something also which we will see, a delayed effect in 2016 for liquidity?
See, we'll see that, and we have seen that in this year also. So it's not like we've not seen it in this year because but I'd rather have a low crude than a high crude. A low crude is good because it helps a lot of your macro, it helps your interest rates come down. So flows stop from, the Middle East. But in the end, it just eases your macro so much, it eases your fiscal deficit so much that I'd rather have that than have higher crude prices.
Right. But overall, don't you think it is creating a much more deflationary environment, or the deflation environment that we are in is slightly just extending? Which means that sales essentially in an absolute amount would not grow?
Yeah, so, sales won't grow and whatever. But ultimately it is, we were worried about inflation all this while in India. So what it has done is it has put inflation fears down, and that has given RBI room to cut. If, crude continues to remain soft, I don't think it's really going to collapse, but even if it remains at this level, at least inflation is not going to be a fear. So you probably have hope that RBI will ease even more next year, which probably is good for the domestic economy.
Right. The RBI easing 125 basis point has already happened. Firstly, will that have an impact on the growth in 2016? And secondly, you expect easing, but it should probably only be towards second half of 2016 once you start seeing, full benefit of 125 basis points being passed on?
Yeah. So, like RBI has eased, banks have been cutting rates much lower than what the RBI has been doing. Second is, after banks cut rate also, there's a lag effect before it flows into the economy. So first half of 2016, we'll see the impact of this RBI cut starting to flow to the economy. And by that time, hopefully RBI will be ready to have another round of cuts. So, through the 2016, we see benefits of this year's cuts, and some more cuts keep coming to keep the momentum going.
Right. And how would you look at now that the Fed rate hike is behind? The currency, the dollar strength, the much spoke about that issue. You think that is largely priced in, that dollar would be stronger, and it's already in the price with the 8% move that we've seen so far in the year?
Yeah, so I guess it's a trend that the dollar is going to be stronger versus the euro because you have two central banks moving in two opposite directions. My view was that after the Fed, the dollar will probably weaken, and that's what has happened. It's been flattish, and there's not been, because everybody played that trade. But I think through next year also, you'll probably see a slightly stronger dollar rather than a weaker dollar versus the euro.
Right. And what does that mean for the rupee? The strength that it has shown will will not probably help in exports, which means that exports could be lower going ahead as well. I mean, the recovery over there could be delayed.
Yeah, so for the rupee, more than the US dollar strength, it's what China does, which probably will be critical to us. Because if China goes in for a massive devaluation at some stage, then we will be probably forced to follow suit. Because you don't want a very strong rupee versus the Chinese currency. Otherwise, I think we'll have a normal small amount of depreciation in the rupee.
Right. But say if India were to, or rupee were to devalue versus the Chinese currency, that war can lead to a lot of disruption. That's what you're worried about?
Yeah, that's what I'm worried about. Because, once that thing starts, each country tries to say, okay, my currencies become stronger, let me devalue. And then the domino effect is something which you can't control after some time.
Right. And that disruption can lead to a lot of businesses getting into trouble as well.
Yeah, and, people become very uncertain that this macro is moving all over the place. I don't know what's happening. Even businesses which benefit from the currency depreciation get worried that, okay, what do I do with my currency? Should I hedge, not hedge? So people get into an uncertain environment, which is never good for business.
Right. Let's talk about earnings then, because that should probably be in focus throughout the year next year. Firstly, 7-8 quarters of straight earnings decline. You think we have bottomed out? Have expectations become realistic, or still expectations of 10-11%, which are there on the street, are slightly on the higher side?
I think expectations are still a bit on the higher side, but it's more like from now, if you have an incremental 1-2% decline in earnings, people just say, okay, we've just got used to it. Because people are just used to that, this will get downgraded anyway. So to that extent, a small downgrade may not make a meaningful difference. It is now, FY17. Like in FY17, are we going to go back to maybe a 5%? Do we end with 5% growth, or do we actually end up with a 15% growth? So my view is that FY17 actually we may end up with a 15% growth. And that is what really will be the big driver for the market.
Right. Jyoti, just a second, wanted to focus on the new listings as well. There are two new listings today. Both the pre-open prices are indicating a 20% plus pop for Dr. Lal as well as the other IPO, Alchem Laboratories. We should be getting the listing in the next 8 minutes, or the prices actually in the next 8 minutes. These are live shots coming in from the listing ceremony that is being held at NSE as well as BSE for Alchem Labs. Jyoti, we were talking about earnings. One thing giving into earnings was the IT pack. The IT pack growing 20% year after year in terms of profitability. You think that will take a backseat? That'll start growing in 10-12% on a year-to-year basis?
Yeah, we are already starting to see that impact where IT is no longer growing the way it used to. So IT is becoming, maybe it's not maturing is the right term, but it's getting towards the maturing stage where, okay, it becomes a slower growth than what it has been. And, that's reflecting the valuations also. IT's got derated because now generally the consensus has become that this will grow at a much slower pace than what it's grown in the past.
Right, but should it be the time to be overweight on IT? Because, traditionally every time we've seen a big slowdown over there, they have come back with new innovations. They have come back, morphed themselves into different sort of company, different sort of client base, different sort of products that they are offering. Or now you think the size is too big and it'll take some time before they return to growth?
See, the size is big. So I guess, even the companies are reconciled to a slower growth than, what they have in the past. It will be tough for them to replicate the past growth. There are two things where you may want to hold IT and be overweight in the near term. One is, the US economy will hopefully recover, and that will help their earnings. Second is, there is still very great concern on the rupee, and so if, people want to play as a hedge against the rupee, then this is one area which is a hedge against the rupee.
Right. And how would you look at the e-commerce space? That is something which the markets are waiting for. Once you have the listing over there, investors may shift from names like TCS, Infosys, which they have been holding on for years, into the new generation IT space.
So, most of the e-com space, I guess it's been the private equity people who played it. It's not been in the listed space. So, to that extent, by the time it really gets listed, one has to see whether it is attractive, because probably, the private equity guys would have made the easy money over there. And some of those valuations now are no longer cheap. So, like at these valuations, you may not want to move from a listed IT company to an e-commerce company also.
Right. Always, Jyoti, for any sector, the tough call to take is that whether the sector is bottoming out or not. For a company like, for a steel company or a metal company, do you think things are bottoming out? Probably, there is some value emerging over there, and long-term investors can come into this particular sector.
So, for metals, my view is that long-term outlook is still very bleak, because, it's just China, which is like by far the biggest buyer of all these metals, clearly is changing its profile. It is no longer going to grow investments at anywhere close to the pace it did in the last many years. So, to that extent, from a long-term point of view, metals is a sector you want to be very wary of. You want to be worried about it, because, your biggest buyer is gone, and there's, I think, nobody to fill that gap. Near term, there may be moves up, because it's a sector which is now consensus underweight. Nobody really owns it. It has done so badly that, you may see some near-term pops, and when these things go up, they go up quite a bit. But it's a sector I would generally stay out of.
Right. What will be your view on within the metal pack, maybe a steel or a non-steel? What is looking better?
So a non-steel is looking better than a steel play.
Right. And what is the reason for that?
So, if you look at the demand-supply imbalances in non-steel and some of the metals there, the demand-supply imbalance is a little more favorable. Steel, there's a lot of China capacity which, can open up if the prices go up.
Right. So, just not taking into names, but a company like Tata Steel, they're trying to rationalize their strategy, the various plants that they have globally. They are trying to sell the non-viable plants and, trying to increase the utilization at the viable plant. Could that be a play in metals going ahead? Companies which are just trying to be efficient rather than, trying to just focus on debt or reducing the debt. So, going towards efficiency, that should be a play going ahead?
Yeah, so that like when you go to individual stocks, there are 2-3 things. One is people who are cutting their costs. So you probably want to buy companies which are managing to cut their costs. The second is there could be people who are operating at very low utilization levels today. So if they increase their utilization, there could be a huge leverage which may come in, and that may start helping those companies. Third is people who are able to refinance and get cheaper debt or something. A lot of them are trading at some distressed sort of valuations today. So there could be some financial improvement which they bring about in the balance sheet which helps them. So probably those are these 3 factors you want to look at before you buy an individual stock.
Right. Let's talk about pharma then. That's also been a space where, a lot of growth has happened. Valuations have re-rated. You think Indian pharma, maybe selectively now, is still in a sweet spot?
See, pharma has been the best performing sector this year. So in spite of all the problems, you think that with so much of FDA scrutiny, people would have got very worried about pharma, but it's still been the best performing, I guess, because, earnings have been very mediocre everywhere else. I think near-term pharma is still good because we have not seen a revival in earnings in the other sectors. But I think in the second half of next year, pharma would be a sector which will start to see less and less investor interest.
Right. The increased scrutiny about FDA that you mentioned, you think that is something which is a concern for the sector, or investors have started to live with it? Just for example, Sun Pharma, they got a warning letter. We have the details of warning letter coming in, no data integrity issue, and it's back to the level where it's got where it announced that it has got a warning letter.
See, it's a concern, but like I said, given that the other sectors are not doing well, and here, people treat this as one-off, okay, things will improve and probably this is the time to buy the stock. People have still continued to buy this sector.
Right. Jyoti, just wait. I think we should have the listing prices coming in anytime soon. Just about a minute remaining for listing. I'll just come back. That is at NSE, where Dr. Lal Path Labs is being listed. About 30 seconds remaining for the listing at BSE as well. Both listings are expected to be blockbuster. I think we should have the pre-open prices with us. So Dr. Lal is indicating a price increase of 30%. It's the pre-open price. It's not, of course, the opening price. The opening should happen in the next 10 seconds or so. And Alchem Labs, that is indicating a price of around 30% as well. So 1380. That's 31% actually. So both the prices are indicating a positive start. We should have the prices now, and they should probably be the focus of volumes today. Alchem Labs 32% higher. We have the prices 1,395 for Alchem Labs, 32% higher than the issue price. And Dr. Lal, if you look at that one, that is 30% higher, 31% higher, 720, 550 was the opening price. Let's just pull up the prices for Dr. Lal as well as Alchem Labs. Both of these companies have got listed today. Fabulous premium coming in for both of these names. Alchem Labs 32%, 1,387. Dr. Lal at about 32 odd percent. Jyoti, any view on the primary markets? I mean, you look at Alchem Labs, it's a good business, but probably, there are some concerns and that's why valuations are lower. Dr. Lal, a clean, proper ROE business, but valuations are very high.
Yeah, so without getting into specific names, essentially what we have seen is like the primary market has picked up with a bang. So, though the equity markets have been flattish this year, in the last 6 months we've seen primary offerings do very well. They are oversubscribed like 50 times, 100 times, 35 times. So the primary market has come back, which probably gives an avenue for people to start raising money and so, ensuring growth back in the companies. I think, of course, it will still be very selective. So it's not going to be that easy for some of these distressed infrastructure companies to raise money.
Right. But do you think 2016 will be a good year for primary markets? As just towards the end, that's November, December, we've seen very good listings coming in the Indian markets.
Yeah, I think it will be a good year. We'll see new listings come in, which will be good for markets because generally, there's always a liquidity concern in India that we don't have enough companies to invest in. So I think 2016 will continue to be a good year for primary markets.
Right. This primary markets also includes offer for sale, big offers for sale coming in from names like Coal India or some big company where people want to exit. Would that also be largely taken up? Because it started well at the start of 2015 with names like Coal India, Sun Pharma coming up with issues. But however, now it seems to have dried up.
Yeah, the offer for sale is on and off, so it is very company specific because in general, a lot of investors have not made money in the government stocks. To that extent, they become wary of it. So I think it will be a good year for primary markets, but I think investors will still be watching for the management of each of these companies who are doing an issue. And I think people will still stay a bit away from distressed companies.
Right. How would you look at the banking space? Let's start with the private names first. We've seen a correction over there. Two concerns, one about asset quality, and a second about the new payment wallets and different methods that we are seeing, because of which the fee income, the other income may actually reduce quite a bit. Do you think valuations don't offer much upside for private banking names?
So, private banking is very consensus. Most people own it. They own it in size. And I think it will still continue to be owned by people. I think private banks will still do well over the next few years. There are concerns on asset quality, but hopefully the economy picks up. That will ease off a bit. And a lot of this impact of the payment banks and all will happen, but it's going to take a long time before they make a material impact on these companies.
Right. So within the private sector banking space also, the focus should be on consumer banking?
Yeah, so consumer banking initially will continue to be the focus because over the next 1 year, I think the infra companies will still struggle. So you have to buy the consumer-focused private banks.
Right. As far as PSUs are concerned, a contra call over there, 6-7 years of clear underperformance. Yes, there are issues, but you think even valuations are factoring that, or the issues are well known?
See, valuations are factoring maybe to some extent. What is not known is the extent of the problem. So investors keep getting surprised with the problems magnifying much more than what they thought. I think the PSUs will do well only when there's a very clear sign that the economy is starting to turn around. In my view, it's probably like a late 2016 or early 2017 story.
But still, some of the large cap names, are they offering very good value? You know, names like Bank of Baroda have seen changes, PNB has seen changes at top level. They are trying to get into some private talent into the companies. You think these changes are at least good? It may take some time, but at least the changes are good, and a basket of these names can be owned.
So the changes are good. So government has the right intention. One is if you get management which is private, and it's not just private. The second thing is you have to give them autonomy. Once you give autonomy to the public sector banks, then maybe they can run their banks a bit more on lines which are like the private sector banks. And that change itself will be positive. People will take it positively. Of course, what it will mean is initially whenever we have a change in management in the public sector banks, we see the next 2-3 quarters being quite poor because, the new management does a kitchen sinking. But beyond that, then at least, the books have been cleaned and so things start to look up.
Right, but that necessarily may not be the reason to own these names.
Yeah, it may not be the reason to own these names immediately. So there'll be some specific banks you want to own in them where, things have got beaten down a lot or kitchen sinking has taken place and then you want to buy those. But to make a blanket call that, okay, we like PSU banks, I think it's still some way off.
Right. Just a word on the real estate pack. You think real estate can do well? Again, 6-7 years of underperformance. Prices of real estate have not fallen materially. Things are looking good. We've seen demand slowing down, but now things seem to be picking up. Is that a space you would want to take some bet on?
See, in real estate, what worries me most is the management. So I think the business will start doing a little better next year. But you have to own companies where, very clearly, okay, this management will look after the minority shareholders also.
Right. What would be your view on some of these gas companies? Oil like ONGC, Oil India have been favorites of people. But names like GAIL, Petronet LNG, IGL, that is something again, which people have been consensus underweight on. You think things are changing over there? Could there be a lot of delta that could be made in the gas companies as well, gas distribution as well as gas producers?
See, over there, it's more like what is the government regulation going to be in terms of what is the distribution pipeline? Because there have been a lot of, talks which keep changing time and again that, okay, we'll cap margins, we'll, allow them freedom on margins. So I think that is nobody wants that uncertainty whether I'm buying based on some view of the government regulation because it could go the other way and you could lose a lot of money. So that's the reason I think unless there's a very clear-cut regulation, we'll probably see them, just being avoided by people.
Jyoti, thank you so much for taking out time for us. Always a pleasure talking to you.